All right, back to work. Break time is over. Time to get back to work. I couldn't stay away any longer here this week. Got some money to make this week and a big week ahead of us. Boy, third week of the month of October now. First of all, markets were pretty wild today, right? Big move down in the pre-market, big move right back up. And this afternoon, another big move back down again. Seems like markets are pretty chaotic, pretty crazy here right now. But whenever we see those big moves back and forth, it usually tips us off to where the best trades are going to be the following day. And I get some great trades we're tracking for tomorrow. And you know how we do it in these videos. I'm going to cover my favorite trades that we have a game plan to make some money on Wednesday. Now, before we jump in, though, and get the party going tonight, we have a lot we're going to cover in a very important video. Before we jump in, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here tonight, will you? Hit that like button for me. Give me a shout out down. Give me a holler in the comment section below. Either way, thank you so much for tuning in, supporting the channel. I missed you guys. Welcome back. Welcome back. Hope you guys made some money the last couple days here. Where are the best trades setting up for Wednesday? Why don't we start off first tonight, as we always do, on the 60-minute charts, the Nasdaq and the triple Qs. Got the Emini and the SPY. The 60-minute time frames give me a bigger picture look. I like to use this time frame to plan my trades for the following day. And then later on in the video here tonight, I'm going to drill down to some tick charts. Tick charts will help us time the perfect entries for tomorrow. So we'll start off on the 60-minute, look at the big picture. We'll drill down here in a moment, though, on the tick charts and talk about entries later on in the video. What are the 60-minute time frames telling us right now? It's a pretty straightforward picture right now. The S&P is bullish into a trading range. The Nasdaq is bullish into a trading range. And if you guys are taking my free trading classes right now, you know that ranges, they love to rotate. We got that rotation down, and buyers are ultimately trying to complete what we call a pendulum swing. It's ultimately a rotation right off that low. Bullish on the Nasdaq into a range, rotating down, and we're trying to complete that pendulum swing right as we go higher. So we're bullish right now on both the S&P and the Nasdaq. But I'll tell you, though, one thing it's very easy to see right now, the sellers. The bears are doing a very good job at holding back these buyers right now. It seems like every time we try to punch this thing going higher, it seems like the bears are waiting there to hold back that run higher. That is a very important clue, and we'll talk about why it's important and how to trade around that here tomorrow on either one of these markets. Now, I'm going to drill down here and talk about my favorite trades here for tomorrow. Before we do that, though, let's double to the schedule. There's a couple things I want you to be aware of. There are three things you got to be aware of here for tomorrow. First things first, overnight tonight, just before midnight, we're going to hear from China. I believe they're reporting inflation data, manufacturing data, GDP overnight. So be aware, if you're trading overnight right now, this is one of those times you got to be very careful because China will do this data dump. Usually it's a bit before midnight, 11:30 right into midnight tonight. Tough to tell exactly when that news be released, but be aware that is a big question mark overnight. They could easily shake these markets higher. Tomorrow, there's no major news in the morning session, but we got that beige book report at 2 p.m. Eastern time. That is the second item on my radar for tomorrow. And third, the most important item on our radar is we now go into a 3-week, what we call earnings season. Tomorrow, courtesy of Earnings Whispers, we have after the close, we've got Tesla and Netflix, and before the open the following morning, that Taiwan Semiconductor. These are the three biggest earnings reports of the week this week. They're all big companies, but these are the ones you really got to watch for. There could potentially be some major market movers. You'll notice that's after the close tomorrow afternoon and, of course, before the open on Thursday. How does that impact us tomorrow? It really doesn't until we start getting late in the session tomorrow. So tomorrow afternoon, that beige book comes out. Just be careful as we go into the latter half of the day tomorrow because we do anticipate big lot traders, big institutions are going to be trading cautiously or completely out of the markets ahead of what really is the biggest earnings reports of the week. Next week, we have what's called peak week, and we ratchet this thing up a couple more notches. We'll talk about that more and more as we go deeper into the month here this month. So keep those 3 items on your radar. China overnight around midnight. Tomorrow, beige book in the afternoon. And we got big earnings tomorrow after the close. We'll talk more about that tomorrow night in tomorrow night's video. So a relatively wide open session tomorrow morning, right? That'll be the time to make your money tomorrow, especially tomorrow morning in our trade room. Now, back to our charts, because it's good to know when the news is. It's good to know when that stuff is, but the money is made on the charts, right? Let's get back to business here and talk about my favorite trades here. If you guys have a game plan to make some moolah on Wednesday. Let's start first tonight on the Emini and the SPY. We'll wrap tonight, of course, here on the Nasdaq and the triple Qs. A lot of what I talk about tonight is interchangeable between the S&P and the Nasdaq, the SPY, and the triple Qs. As I mentioned in the introduction, right now we are bullish into a trading range on the E-mini and the Nasdaq for that matter, and we are trying to rotate running higher. The most important thing you have to think about right now is it's a bullish overall bias. I'm going to be very careful buying high right now, because every time it pops up, we have to get that breakout through. One of these will probably end up pushing through. The question, though, is which one? Let's see if we can figure out which one's going to push through here for tomorrow. Let's now grab the tick charts. This is a 7,000 tick chart you'll notice in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA, one of the most important tools we use every morning in our trade room. Now, I mentioned earlier that whenever we see these things, these marks go back and forth, right? Remember, think about it, had a big wild day today, right? Big move down in the pre-market, big move up for most of the session today, and a big move down back and forth. That's the most important clue on this chart. I know it seems very chaotic. I know it seems erratic, but whenever we see big moves like this back and forth, it usually means there's a range right in the middle. And ultimately, both the Nasdaq and the S&P right now pretty much are surrounded by ranges. Range down bottom, range above, and range right in the middle. We had an example of this last week as well. And of course, if you're taking my free classes right now, if you're a student in our free trading course right now, you know that whenever we see a range in the middle of the chart, what happens? Markets love to rotate back and forth, right? Back and forth. That is the name of the game whenever we see a range-bound market like this, right? We're buying off the low, selling off the high, buying off the low, right? Rinse and repeat, rotation back and forth. Now, very important, if we understand that the tick charts, the faster time frames right now, have a range right in the middle, buying low, selling high, then think about the overall direction on the 60-minute. This is where having a higher time frame, as we call it, or a bigger directional filter will help us plan the best entry techniques for tomorrow. Right now, on the 60-minute, we are clearly bullish on the 60. So when I look at this now on the tick chart, I can be a lot more aggressive being a buyer, right? Buying off support, and I got to be a little bit careful, right? Trading to short off the high, right? Shorting off the high is a lot, well, I have to be more patient, be more disciplined, get a better signal to short off the high. And as you can imagine, another part of this will be that breakout, right? Because one of these moves higher is going to successfully pierce that high, and I want to make sure you know how to make some money on that breakout. So we have a lot to cover. I know a few minutes behind schedule tonight, so we'll jump right into it. I'm going to talk first, though, about the move going lower here right now. If rotation completes itself, we should be going lower. There's a couple different techniques I'm looking for to buy this off the low, and later in the video tonight we'll talk about if we go higher, how to short off that high, and some breakouts going higher as well. I'm going to cover both sides of the market for you. I want to make sure you guys have a game plan to make some money here for tomorrow. Now, where do you think the best entries are going to be in this environment? It's a range market. So the best entries are going to be, and exits, by the way, are going to be around the big edges, right? So buying off the low and selling off the high. We have an overall bull bias, which means we may not make it all the way down to take out that low. I would love to get down and buy off that low, but we may not get there because of that overall bullishness we saw on the 60-minute. In that situation, if all we do is take out that low, remember, we anticipate rotation back and forth. We may not get all the way where we want. The bottom line is, if all we get is a shallow pullback right now, I'm going to use something I call a two-try trap. The idea behind a two-try trap is that I want to be a buyer down here, but I'm concerned I'm buying too high, right? I'd like to buy down around that low. That would be the ideal. But because we're so bullish overall, I may only get a chance to buy a shallow pullback. Now, in my free trading classes, I call these failure patterns, right? So bears try once, bears try twice. I want to use their stops, right, to fuel that move going higher, right? Again, we anticipate this market trying to rotate back and forth, right? Back and forth. Again, my favorite entry is way down here. If we don't get that, if all we start getting is bears trying once, bears trying twice, I'm going to look for, again, I call this a two-try trap in my free trading classes. This will wrap together both a failure pattern and a bear trap pattern. That's a higher high in price along with that lower low right there. It's a two-try failure. And the reason why I want that trap entry is because I want to buy as low as I possibly can. Again, because the ideal entry is way down here. Now, if I do end up down around that low, right now we have a lot more, well, I can be a lot more aggressive, right? I can be a lot more confident because I'm buying nice and low now. If we end up rolling lower now, remember, this will still be pretty bearish, right, in the short term. I have to respect the momentum of those sellers. But now what I'll do is I'll simply look for the bears trying once, bears trying twice. I'm going to use their stops, right, to fuel that reversal or that fake out breakout, if you will, right, going back up into that range. You can see an example back here, right? They run lower, they pull back, bears once, bears twice, and once they fail, right, it'll swing back up right into that range above us. Again, these are called failure patterns. And if you're here for the first time right now, watching for the first time right now, this may be all brand new to you. So what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link and take that free trading course, because the strategy that you'll learn in that short video series will teach you a stupidly simple trick we use every morning in our morning trade room to know exactly where the best winning trades are going to be that day. But more importantly though, I'll teach you my 4 favorite entry patterns to help you start making money on your own. Things like failures, traps, crown reversals, pullback trades. You'll learn all the details in that video series. If you're not making consistent money right now, if you're missing the best trades each day, hit that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab that link that popped up there in the upper right-hand corner, I'll put all the details in the description of the video here tonight. So if you can't grab that link that popped up, there'll be a link for the free classes in the description as well. I'll also put my Twitter feed link down there as well. I post a lot of charts and updates and psychology stuff on my Twitter feed. You can find that down in the description there as well. So again, we are anticipating that rotation back and forth, right, around the highs and lows of that range. Later on in the video, I'll talk about as we go higher, so don't go clicking off me here just yet. If all we get is a shallow pullback, we want to buy as low as we possibly can with what I call a two-try trap, higher high in price, and that trap low. If we take out that low, I now want to, again, rope in those sellers, use their stops to fuel this move going higher, and grab that failure running back up into that trading range, that trading range. Now, as the market rotates higher, what's the best way to get in up here? Because if we anticipate the market's going to want to rotate back and forth, right? There's money to make in most cases as we rotate higher. The key is to look for traps as it rotates. In the free trading class, we talk a lot about how we look for failures in range markets. We look for failures around the edges, right? So failures at the edges, and then traps as we rotate. That's the key really when it comes to trading range bound markets, right? Wait for a breakout lower. Trap, in this case, the bears in at support under the range. Use their stops to fuel the move going higher. Again, we call these failure patterns in our free trading classes. And then, of course, as we rotate higher, we now know where the market wants to go. It wants to take out the other side of that trading range. We now look for that strong run up, that higher high in price, and that trap right below that low. As you can see, I love traps. Traps by far my favorite entry technique we use every morning in our trade room. So again, failures at the edges, and as we always say, traps as it rotates, right? Traps as it rotates back and forth. Another pattern we want to keep an eye out for, if we do end up rolling lower, we may not get that two-try failure going higher again. It may end up popping up and retesting that low. Remember, anytime we see a real strong move in one direction, we oftentimes see it pull back and retest that low. That is even better because then we can look for what's called a double bottom off that low. If we were to get a strong run going lower, if those bears come in and pull back and basically retest that low, that is, as we say, mission accomplished in our trade room, because again, anytime we see a strong move in one direction, we expect a pullback and a retest of that level. Once we get that double bottom now, remember, we don't pick bottoms, all right? Picking tops and picking bottoms. I know it seems easy, right, on days like today, but you're not going to get lucky like that every single day. Rather than picking tops and bottoms, I'd rather find an area where I want to be a buyer and then wait and see if I can get some rookies, some sellers to come in, try a couple times, and then use that same pattern, right? That failure into that trap pattern as it rotates off the low. So even if we do end up rolling over and taking out that double bottom, right? If it rolls over here and then pops up and retests that low, even better. That's even better because now anyone who sold short on that shallow pullback, they're probably taking their profit off, at least a big chunk of it, at that low. Then at this point now, we can rope in those bears, rookie traders, right? Rookie sellers at those lows, use their stops to fuel that move going higher with a failure pattern. And again, failures at the edges, traps as it rotates into that bear trap. Again, strong run up, higher high in price, trap below that low, and we know where the market wants to go, right? It wants to rotate back up and take out the other side of that trading range. Okay, so now we have a pretty good game plan, at least I think we do, right, for trading this thing as it goes lower. It's that shallow trap, it's the two-try failure into the traps going higher here. The next question is how do we trade this as it goes higher? Because we're overall bullish on the 60-minute, right? I got to be careful buying it high. Every time we've gone higher, we've run right into overhead resistance and sold right off again. And could I sell it? Right? Could I short this thing off the top? You definitely can, but I got to be careful. Right? Let's talk about this now on the Nasdaq. Over on the NQ. The NQ is very similar here to the S&P, like I mentioned earlier. It's bullish into a trading range. We're trying to rotate right now off that low and punch this thing going higher. The problem is every time this thing pops up, it's getting whacked right back down. Let's now look down at the tick charts here on the Nasdaq. And right away, you can easily see the same basic clue we have on the S&P, and that is a big move down. Remember, what are big moves supposed to do? Strong strong moves are supposed to pull back and retest, right? Strong moves are supposed to pull back and retest, right? So we're seeing a lot of these big moves, these strong moves in both directions without that retest. That usually means there's a range brewing somewhere right in the middle of that chart. We can start seeing that develop here now on the Nasdaq. Now, if you recall on the S&P, the same game plan applies on the Nasdaq. So if you go lower, for example, I have my range right here. I've got my pendulum swing, right? The amount above the range, amount below the range. Again, you'll see a lot of examples of these inside our free trading classes. So if I take out, for example, that pendulum swing, it's not the ideal location, right? The ideal place to be a buyer is down around those lows because, again, it's one big trading range right now. However, again, we're an overall bull market. So if I can get that two-try trap, and that is the bears trying once, the bears trying twice, and that trap low, that is a great entry in a really a bad location, right? Not a great location here. Higher high in price and that trap. Again, if we end up taking the lows out, it's 1, 2. I don't need that trap any longer because I'm buying in the ideal location. I'm not worried about buying too high at that point. And again, it could be a two-try failure there. It could be a pop-up, a double bottom. It's the same exact game plan I described in the S&P a few moments ago. Now let's talk about as we go higher. All right, as we go higher here, I like the idea of selling short off the high. Remember, you always have to ask yourself these two questions. How is location and how is momentum, right? So if I want to sell off this area, how is my location? It's great, right? It's a great spot to be a seller because you're at resistance above a trading range. Again, ranges act like magnets, right? So we know there's a big magnet right in the middle of this range right now. As we go higher, it's a fantastic place to sell short. But that's all that's good, right? Because momentum is not bearish, right? What's momentum doing right now? Well, first of all, we're overall bullish on the 60-minute. So just right off the bat, we're going against that direction, which means we got to be careful. Also, too, if we go higher here right now, that is a lot of bullish momentum. I'm not in the game. I'm not in the business of picking tops and bottoms like that. Again, you're more willing to do that, but I would rather wait up here. And what do you think? What do we need? We need some sort of catalyst to turn this thing around and go back lower. Again, this is not the same situation as buying at the low. Buying at the low goes with overall momentum. Trying to sell the high goes against it. I need to run some stops. I need to trap in some rookie traders and use their stops to fuel this thing back down into that trading range. This is where a crown reversal comes in handy. This is by far the best way to short a bull market that is into an area of resistance. And it's very, very simple. I love to use that two-try rule. Buyers try once, buyers try twice. We talk a lot about this in the free trading classes. So you want to see buyers try twice here. And the reason why you want to see them try twice is because we need those stops to fuel, right? We don't have momentum on our side. That's why I said earlier, we got to be a little more conservative, a little more patient, a little more disciplined, trying to sell off the high here. And the most important thing is that I don't want to sell it as it goes lower. All right, I don't want to sell down here. Why? Because look what happens. Draw a trend line up off that high. Bring it down off that low. What do you see right there? An easy bear trap, right? An easy bear trap. I need to be short way up here, right? In order for me, it's very, very simple. If I want to sell short at resistance in an overall bull market, I have to expect that as the market goes lower, who's waiting down here? Buyers, right? Because it's a bull market overall. Trend line off the high, off that low, big channel, lot of potential buyers waiting right there off that area. So in order for me to avoid that easy bear trap, I want to make sure I get those buyers trapped in once, and then try to sell as high as we can. I want to sell short here as high as I possibly can. Let them try once, let them try twice, let them wrap that rope around their neck, right? Let them dig their own grave up there. Let them commit to it. And again, I need to be in this trade short with a crown reversal well before I take out that low, because you're more susceptible in these situations, right, for that channel like that. That way, if it does rip higher here, I've already got my first target hit, right? You've already got that stop moved down to point of entry. You've already got the risk off on that trade by then, right? On reversals like this, quick first target, move that stop down to point of entry. In this scenario, if it does trap low like that, you're in for a small profit, right? Rather than trying to short way down here, right, and getting your face ripped off, right, with nothing to show for it besides a bunch of red on your account. Okay, that's why crown reversals are so important, right, off that high. Up, buyers once, buyers twice, trap high. You need that lower low and that trap high here to short off the high here. And then remember, if it does end up collapsing back down, say it again, right? It was failures at the edges, right? And what was it again? Traps as it rotates, right? Traps as it rotates. It's a failed breakout at the edge. And then as we go lower, how do you do it? You trap it, right? You look for traps as it rotates back and forth here. In this case, it's against the trend. It's a crown reversal pattern, basically a two-try failure with a bull trap entry, crown reversal pattern. And then as we go lower, strong run down, lower low in price, and that trap above that high. Again, failures at the edges, traps as it rotates back and forth from top to bottom of that trading range. Now, let's talk breakouts. Breakouts don't seem as likely until we get the big earnings reports tomorrow afternoon, but here are two breakouts I'm watching for as we go. The most common breakout is called a pop and grind. Okay, it'll look like this. It'll pop up and begin to grind, going higher. Again, we call this the pop and grind. It pops up and begins to grind, right, going higher. We are overall bullish on the 60-minute. So it is a likely scenario. Eventually, we're going to get that pop and grind. It will break out of this range. When that happens, we simply don't know yet. Once we see it, though, then we go out and draw the trend line off the highs. We basically copy and paste that trend line down to find a channel. We look left, find some prior swings, right, off those lows, and we go in and look for the first test off the low of this channel. Now, I'm going to keep it simple here in the video right now because we're a little bit late on time here tonight. But in the free trading classes, I talk about things like traps, failures, pullback combinations, strength trades as we rip higher. I call these pop and grind breakouts. They're very, very simple. They'll pop up, they'll grind, going higher. You want that first test off that low, which any of the entry patterns will work on this. I love traps. Failure patterns are pretty common as well. Again, any pattern you guys are learning in the free trading course will also work there on that pop and grind. Another one would be kind of this scenario. Sometimes what happens is the market will really race and run higher. You want to think about this scenario. If we start to sprint on a breakout higher, right? Again, not expected until we get news tomorrow, but I want to make sure we're all ready for it here nonetheless. If we start seeing a real strong breakout going higher, we're probably going to end up getting a breakout pullback, okay? These prior highs will then be used as an area of support. Okay, they're called breakout pullbacks. Very, very simple, very, very common, right? They break out above that trading range and they pull back and they basically bounce off, in this case, the high of that range. The two patterns you want to look for is, as we're going higher, you want to look for that, in this case, a bear trap, right, going higher, and then look for that deep pullback. This will usually be a measured move, A, B, C, D, that will tell you where that market wants to go. This would be a trap pattern, like you guys are learning in the free trading course. Strong run up, higher high in price, right? And that trap below that low. And then now, once we start getting up around that measured move area up here, right? Symmetry, A, B, C, D. Then we don't want to buy high anymore. We now look left and we mark up where those prior highs are, right? Now what I'll do is I'll go out. I'm going to draw a trend line off these highs, bring it down off that low, and now we've got our sweet spot. Now we kind of know where I want to be buying here now on that breakout pullback. Wait for the pullback, get underneath the moving average, and trap those bears in with a failure pattern. Then one more time, get above the moving average for a failure into pullback, combination. Now, again, if you're watching for the first time right now, this is all probably brand new to you. This may not make a lot of sense to you. But again, if you've got our free classes under your belt, if you're within the trade each morning, this should make pretty good sense, right? So as we go higher, it rips higher like this. Again, we're keeping an eye out for that here tomorrow because we're overall bullish. It's a bear trap. It's a higher high in price. A trap low, a trap entry going higher. And again, once we start taking out that measured move, right? AB equals CD. We don't want to buy too high up there. This range below us will then be used as a support area for a breakout pullback. We wait for the pullback. Remember, we don't pick tops and bottoms. We find areas of interest. We wait, in this case, for the bears to come in, get short, and then use their stops for a failure, and then grab that first pullback off the moving average for a failure into pullback combination and a target back up to retest that high. Those are called breakout pullbacks. And ultimately, you've got 3 different ways to make money. One is that bear trap while it accelerates going higher. The next one is a trap below the moving average for a seller failure pattern. And then once you get above that moving average, make sure you get that pullback entry well before you reach that high. What I do is I'll put a line on here, and I'll think about where that halfway point is, going back to retest the high, and I'll make sure I get in on that pullback underneath the 50% point of the size of that pullback. That way my risk, right, and reward are balanced on that entry. All right, a little more advanced, but if you're a student of mine, right, you know what I'm talking about, and we'll go over more of that in our video classes. But that's the game plan if we end up going higher here. Watch out for that breakout into pop and grind, and watch out for that big breakout pullback, right, if it ends up ripping higher. Now we wait, right? Now we wait. Hopefully, we'll go all the way down, trap these bears in, and get that easy failure and run back up into that trading range. The big variable right now is what happens overnight and how does the market react to big news coming out of China. So grab your popcorn, kids. We'll see you guys tomorrow morning, 8 o'clock Eastern time. The game plan is ready now. Pretty easy game plan here for tomorrow. But I can't think of any better way to learn this stuff than to come out and trade it with me every morning in our morning trade room, 8 o'clock Eastern time. Come out and ask questions, watch me trade, look over my shoulder, trade along with us. I can't think of any better way to do this the right way the first time around. Again, I'll put all the important links, the members, the trade room links, the free class links. I'll put everything you need in the description of the YouTube video. I would definitely recommend start first with the free classes, learn the basic strategy, get your feet wet, get momentum at your back, get the wind at your back, and soon enough, be ready to trade with us sometime soon in the morning trade room. If you got questions or any concerns here or any difficulty getting access to our free classes, I'm always here to help out. Don't be afraid to call the office or use live chat. We're always here. Megan and I are always here answering questions and helping people out if you need help along the way. All right, guys, hope you learned a bunch tonight on the video. I missed you guys the past couple days. As always, it's good to be back here with you guys on the video newsletter. Now, big day tomorrow. Get some rest. I'll see you tomorrow morning in the morning trade room. If not, same time, same place, back here tomorrow afternoon. Be there or be square, guys. Adios, amigos. Bye-bye for now.